Hey folks, I'm Iggy from the Investing Iguana. If you think AI investment is all about chasing US tech giants, you're leaving good money on the table. Here's the Singapore edge. We've built not just hype, but the rails, the power, digital infrastructure, and real business connections. So AI here is less fantasy, more cash flow. Today I'm breaking down the practical side of AI investing in Singapore. You'll get a clear map of listed stocks with real AI exposure, buy-hold calls designed for CPF and SRS, and my step-by-step SG investor playbook. This script is adapted from my latest deep dive on Substack. Check the link in the description if you want all the charts, checklists, and tables. Here's what's coming up. Why Singapore outpaces Hong Kong and Tokyo as Asia's true AI core. The hidden SGX-listed champions. Data center, REITs, semiconductor suppliers, digital infra plays, how to use CPF and SRS to build AI exposure with model portfolio plans, all the key risks, interest rates, chip cycles, even grid constraints, my personal verdict and action checklist tailored for Singaporeans. Ready? Let's dive in. Singapore is the backbone, not just a bystander in global AI. Some fun numbers. Up to 18 to 22% of NVIDIA's global revenues get assigned to Singapore, mainly because Asia buyers channel purchases here, not just for hardware, but strategy, billing, and operations. Even if only a fraction lands physically, Singapore is Asia's spine for AI deals. In December 2023, the National AI Strategy 2.0 dropped, bringing $1.6 billion in funding and pulling in a jaw-dropping $26 billion from tech giants. This isn't scattergun spending. The government is laying roads, not sprinkling magic AI dust. Result? Forecast pegs Singapore's AI market at $1 billion today, potentially $5 to $16 billion by 2030, with annual growth north of 28%. What sets us apart is the fast lane from policy to profit. Thanks to direct access on SGX, you can buy stakes in real data, real chips, real cash flows right now. Imagine a chart here showing Singapore's AI market size projections. The lines point sharply up, and local investors have liquidity others only dream of. Here's what I'll show you. This is about mapping the whole AI value chain to public stocks. Americans might crow about chip designers, but we run the routers, buildings, and 24/7 power. The US is the brain, we're the spine. So let's build around that. Think of data centers as Singapore's iron lungs for AI. Every machine learning run soaks up kilowatts, cooling, and bandwidth. Enter the DC REITs. Keppel DC REIT, the only pure-play DC landlord on SGX. They keep occupancy up, 95.8% as of the latest report, with long leases and rental escalations. Yield sits around 4.4%. Add in stable tenants and a price that's bounced off 233, and it's a standout. Digital Core REIT. This one's for the bargain hunters. 2025 yields forecast around 7.9%, but volatility's high, a negative 30% performance over 3 years. The kicker. They just grabbed a 20% stake in a Japanese data center, so management's not sitting still. Mapletree Industrial Trust. Not a pure data center play, but DCs now anchor the portfolio. Think of it as a hybrid, a safer way to bet on growth plus industrial stability. Imagine a table that compares these three. Keppel for quality/growth, Digital Core for deep value by yield, Mapletree Industrial for diversification. The key insight? Pairing avoids lopsided risk. Buy, hold, recap. Keppel DC REIT. Buy for best balance of quality and AI upside. Digital Core REIT. Hold for yield, but ride the bumps. Mapletree Industrial Trust. Hold or accumulate on dips. Why not just pick one? Pure plays give max AI leverage, but mixing with a diversified REIT smooths returns. That's your first building block. If data is the fuel, who's selling the petrol in Asia? Singapore's DC REITs, that's who. AI needs silicon, and Singapore's suppliers keep the world's fabs humming. UMS used to depend almost entirely on applied materials, but slashed that to 50%, added new US-listed clients, and built a new facility in Penang. The result? More diversified order book. It's a buy, especially for those with a growth bent as the next chip cycle builds. In chip testing powerhouse, serving top global customers, has endured some cyclical slowdown, but just upped revenue guidance to $820 to $850, proving it can flex in tough times. Wait for clearer uptrend before buying big, but worth a small position. Micromechanics, focused, quality operator doing precision parts. Not immune to the chip cycle, but boasts careful management and a healthy balance sheet. Best added on weakness, as cycles always swing back. Visual Q, a checklist comparing each stock shows UMS currently as the best risk-reward, AEM for patient investors, and Micromechanics as a long-term quality pick. Buy, hold, recap. UMS, buy for bounce when chips recover. AEM, hold, watch for order pickup. Micromechanics, hold, top up in any big market lulls. Cyclical? Yes. But that's what lets you grab double-digit returns when the cycle turns. Singapore listed, globally critical. Would you rather chase U.S. chip stocks or back local names, no U.S. withholding tax, and CPF/SRS eligibility? AI only scales if the network does. Here, Singtel is the backbone. Singtel, Z74. Not a pure AI play, but sits in the middle of Asia's digital growth wave. Data centers, enterprise cloud, regional expansion. Dividends are steady, balance sheet strong. It's that glue for your portfolio. Table highlight, Singtel is the income backbone, bridging high-growth DC and volatile chips. Buy, hold, recap, Singtel, buy for stability and as your core holding. Even if you're tech shy, Singtel lets you benefit from AI-powered demand, all while pocketing reliable payouts. Remember, if you want the full written playbook, all the portfolio-ready checklists, and the spreadsheet visuals, grab the full post on Substack. The link's in the description. Here's the must-know for Singaporeans. Use your SRS for immediate tax savings and CPFIS for steady compounding. SRS route, core income, 60%, Keppel DC REIT, and Singtel. Growth, 30%, UMS plus AEM or Micromechanics. Diversifier, 10%, a broad tech or AI fund if available. Execution, contribute early, dollar cost average monthly, and rebalance every 6 months. CPFIS route, 40% Keppel DC REIT, 30% Mapletree Industrial Trust, 30% Singtel. Execution, buy quarterly, reinvest dividends, check the whole thing once a year. Imagine a checklist graphic. SRS for flexibility/tax relief now. CPFIS for marathon runners seeking compound growth. Both methods tap Singapore's best AI proxies with low friction. CPF or SRS don't just park your cash. Make it work on AI's backbone. Every hero stock has a villain risk. Here's your SG Investor playbook. Interest rates, high rates squeeze REITs. Solution? Stagger your entry. Focus on REITs with longer debt profiles. Chip cycle, equipment orders swing wildly. Don't go all in. Mix cyclicals with safe income names to manage the ride. Power and grid, AI data centers, guzzle power. Prefer REITs with secured grid deals or green credentials. Policy, geopolitics. Export controls can kneecap order books fast. That's why diversification across geography and customer base matters. In a checklist graphic in the article, these risks are laid out with clear hedging tactics. So hit pause, screenshot, and set your own alerts. In Singapore, the real risk is sitting out. For every policy twist, there are plays to soften the blow. Here's how to turn insights into action, whatever your risk appetite. Conservative, risk 3-4, 50% Keppel DC REIT, 30% Singtel, 20% Mapletree Industrial Trust. Aim for 4.5%, 5.5% yield. Buy in 3 batches over 6 months. Balanced, risk 4-5, 35% Keppel DC REIT, 25% UMS, 20% Singtel, 20% diversified tech/AI fund. Target 8%, 12% returns, DCA and monthly, rebalance biannually. Growth, risk 6-7, 40% DC REITs, 40% chip players, UMS, AEM, Micromechanics, and up to 20% private/venture if you qualify. For big swings and big returns, visual. The model portfolio table lays out allocation pie charts matching each approach, so you can pick your lane based on how much you can stomach in volatility. No one-size-fits-all. Mix and match these slices for a portfolio that fits your own risk comfort. The next chip-up cycle could hit fast. Equipment orders usually lead earnings rebounds. Same goes for new DC launches. When global funds move, they re-rate Singapore fast. Semiconductor recovery. Orders rise before earnings, so add gradually. Institutional flows. New DCs and government support can spark global interest. REITs rebound when yields stabilize. Watch local interest trends. Don't try to time the market perfectly, but don't sleepwalk through the cycle either. This decade's AI tailwind is real and picking up speed here. My conclusion: Singapore is this decade's real AI infrastructure play. US tech might get the headlines, but SGX gives you pure exposure to cash flows fueling Asia's AI boom. Here's your near-term action list. Open or top up your SRS for instant tax relief. Start a core in Keppel DC REIT and Singtel. Add Mapletree Industrial Trust for stability. Mix in UMS and a small slice of AEM or micromechanics for growth. Keep your bets spread. Never go all in. Preset both buy targets and sell trims. Review every quarter. Rebalance every 6 months. Keep 10% cash ready for dips. This layer cake approach, stable REITs, select chip names, telco glue, and disciplined buying puts you ahead of most local retail investors who often miss out both on the tax wins and real AI compounding. So I'll leave you with this. In every tech upcycle, most of the gains go to the builders, the ones with cash flows, not promises. Singapore has built Asia's AI picks and shovels. Don't watch from the sidelines. Build with discipline and stack those compounding gains for your own SG future. To recap, we mapped Singapore's unique AI ecosystem, pinpointed the best stocks across DCs, chips, and telecoms, built CPF/SRS ready model portfolios, and broke down all major risks and action steps. You can take these practical lessons into your SG investing journey and come out stronger, savvier, and set for the next wave. If you found this valuable, hit like, share, and subscribe. To get all the exclusive charts, tables, and deep dives, become a premium iguana on Substack. Your support lets me keep breaking down Singapore's investing maze into practical winning steps. Want continuity? Don't miss my next video on how CPF, SRS, and dividends build enduring wealth, Singapore style. Click through. We'll dig even deeper into optimizing your SG investment playbook. See you in the next video. And remember, let your money work as hard as you do.